Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, March 15th, 2017. Look at this market go on the back of the Fed. Holy cow, what a rally. 1% to the upside. Listen, it's 1%. I mean, I guess it's not that crazy, but it's still a very solid move on the S&P 500. We were already rallying into the announcement here, and then off to the races. Janet Yellen and friends at the Federal Reserve raising interest rates by a quarter basis point. The reason why that's significant is not because of the quarter basis point, but because they were initially thought to maybe be talking about another 3 rate hikes this year, and they pared it back to just 2 rate hikes. That's why yields have fallen. If you take a look at the TBT, which tells us what interest rates are doing, take a look. Look at that rollover off of a cliff on interest rates. And again, interest rates have fallen, which has actually put pressure on banks. If you take a look at Goldman Sachs, it is not participating in the rally, actually negative on the day. Bank of America is basically around the flat line, down about 13 cents now. And even, the likes of Citigroup and other players out there are negative as well. So again, banks are under pressure, but everything else is going nuts to the upside. Tech, anything else. I mean, you look at any other sector, industrials, whatever it may be, and they are a rocket ship to the upside here. So that's what's going on. In addition, gold is having a monster move here. Take a look at the gold chart. The GLD up about 1.65% or $1.90, and that's again because the dollar is pulling back sharply here. Take a look at the dollar dropping off the cliff here. 1% drop on the dollar, which is that's a huge move for the dollar, folks. Absolutely huge move. All right, what does it all mean? All right, bottom line, this market's kind of has CNBC talking about a Goldilocks scenario, like everything's going to be great forever. And listen, it might be a continuation of the rally for the coming days. It is very possible. But you have to look at it like this. If interest rates rise, markets are going to sell. And you can actually see this by the intraday chart on the TBT. So if you take a look here, right? So initially we had this drop here, okay? So see this drop? On interest rates fell and then they bounced back. And if you go to the spiders here, take a look at the SPY, okay? And what you can see is you rose here and then you pulled back as interest rates jumped. So that just tells us that interest rates are going to act inversely to the actual market. Market's going to trade inversely. So as long as interest rates keep pulling back, this market should have legs. The only negative to interest rates pulling back is that it's going to hurt the banks. But the banks alone, as long as everything else rallies, the banks can go down. That's okay. All right, now if interest rates start going up, that's where the market could get hurt, and that's what we have to watch for, okay? But right now it is clear sailing. Markets are loving things, and again, it is what it is. Markets are on a racehorse here, headed higher, and you have to give it credit. Janet Yellen threading the needle here. And again, markets continue to be euphoric, even though the financials are the only sector not participating. All right, folks. And again, what a move today, up 1% on the S&P 500. The QQQ, which was weak earlier, we saw lots of tech stocks weak, trading up not quite as much as the S&P, a little less than 1%, about 0.8%, but still a fantastic rally here. And even semis were weak earlier today. The SMH, let's take a look at the SMH here. The SMH caught up beautifully and is having a rock star day. All right, so again, I just want everyone to be fully appraised of what's going on here in the market so you fully understand it. Yields are falling because Janet Yellen and the Federal Reserve raised a quarter basis point, which was expected, but the market had worried there were going to be 3 more rate hikes this year. They said only 2 more this year. Therefore, interest rates lower themselves because it's a lower than expected amount of interest rate hikes, and the lower yield is juicing this market. Remember, when yields come down, when interest rates come down, people take their money out of bonds and put it in the stock market. When interest rates go up, people have to make that decision and say, okay, listen, I can get XYZ interest on a bond. Why am I risking my money in a stock? So do a comparison. Imagine if interest rates were 10%. Would you put your money in the stock market? Well, probably not, right? Because you could get a guaranteed 10% on a bond. See what I'm saying? How it works like that? So things like this are very important, folks. You got to understand, and that's why the market likes low interest rates. That's why for the last, 8 years since the rally began, the markets have been very favorable. Now, quickly, last thing I want to just point out here, going to the daily chart here, we did get a big bounce. Notice how the market held the 20 moving average the last few days and then a big pop today. This is going to be your line in the sand on the S&P right here. So 240-ish. We're only about $1 away from that double top high. And the question in my mind is, do we test it? That's going to be the big level if we test that level. Okay, so watch that closely. All right, if the market tests it and can't get through it, could be a little bearishness. If it doesn't test it at all, obviously bearish. If it blows through, this market's going higher. And again, generally speaking, this is a strong move. Not a lot of volume, 62 million, but nonetheless a strong move. You got to give the market credit, and you got to be continued to say this market can go higher until proven otherwise. I mean, we really got no other choice but to say that, right? Because the market, every pullback, even this, I wouldn't even call this a pullback, little consolidation being met with massive amount of buying here and a big market surge up 1% on the S&P. Come join us at InTheMoneyStocks.com. I just entered a new position there. If you want to see the live position, you want to get the entry price, everything else, check it out right there, right now. See you there. Take the 7-day free trial.